Dear student, Assalamu alaikum. I hope by the grace of Almighty Allah, all of you are fine. Dear student, I am Mohammad Shahjahan, Assistant Professor, Department of Accounting, Milestone College. Dear student, this is our lecture 1 on chapter 6, and our chapter 6 is analysis of financial statement, that means ratio analysis. Dear student, you know this is very important chapter. Dear student, after learning this chapter, after this class, you can able to learn, have an idea about financial statement analysis. You have an idea about calculation of ratio. You have an idea about the decision making of future plan, and you can have analysis the financial statement. You can prepare and explain the list of current asset, liabilities, liquid asset and liabilities, fixed asset and long term liabilities. Dear student, analysis of financial statement. Financial analysis is the process of identifying the financial strength and weakness of the firm. That means, with the help of financial analysis, we can find out the strength and weakness of an organization, and it will build up a relationship between the item of balance sheet or a statement of financial position and income statement. Dear student, ratio analysis is process of identifying the financial strength and weakness of the firm. So you can understand after this lecture, inshallah, we can find out the strength and weakness of an organization. That means we can analyze the financial statement of an organization. Necessity of and importance of ratio analysis. Dear student, ratio analysis shows us liquidity position of an organization. It helps us to long-term solvency, find out the long-term solvency of the organization. It also helps us operating efficiency of the organization. It also helps us to know management efficiency of the organization, and ratio analysis help us to assessment of past performance. That means whatever the performance last year, the previous year. Dear student, it also help us cost and expenditure control of the organization. It help us investment decision. Ratio analysis is very important for auditing. You know, auditing is important, either their accounting is correct or wrong. Dear student, ratio analysis help us. Financial statement analysis is the best way of inter-department and firm comparison. That means you can compare one department with others with the help of ratio analysis. And it is another importance is that profitability test. Dear student, now limitation of ratio analysis. Though ratio analysis is very important for us, but there are lots of limitation of ratio analysis. The limitation are as lack of proper analysis. Actually, with the help of ratio, we cannot analyze properly because it has some hypothetical data. Dear student, difficulty in comparison. We can compare, but there are some limitation of this ratio analysis because we cannot compare properly. Problems in correct item selection, problems in interfirm comparison, changes in price level, ultimate stage of financial statement fails to indicate future. Dear student, these are the some limitation of ratio analysis. Though ratio analysis has limitation, but it has a great role in modern business. That's why it is very much popular for taking decision. That means managerial accounting, the management take lots of help from ratio analysis. Dear student, now what ratio will analyze? Ratio to test liquidity or short-term solvency. That means there are some ratios which help us to find out the short-term solvency of the organization. Number one is current ratio, then quick, liquid or acid test ratio, then working capital ratio, and then cash to current liability ratio. And these are the standard value. For current ratio it is 2:1, for quick ratio it is 1:1, for working capital ratio it is 1:1, and for current ratio it is 0.25:1. Dear student, with the help of this four ratio, we can analyze the organization is solvent or not. If it is solvent, then you can take decision to do business with that organization. That's why ratio analysis is very much important. Dear student, now ratio to test capital structure or long-term solvency. Dear student, there are lots of ratio for doing test the capital structure. That means the structure of the business. That means the organization is solvent in the long range or not. That means if the current ratio or liquidity ratio is good, that means the business organization is not good. If it is long term, it is a strength. It is longevity is good, then we can say that this organization is a good organization. For the long term solvency check, we can find out that this ratio, debt to equity ratio, equity to asset ratio, liability to asset ratio, capital gearing ratio, interest coverage ratio, dividend coverage ratio, long term cost coverage ratio, long term debt to equity ratio, fixed asset to equity ratio. There are some standard value for debt equity ratio. It is 0.33 is to 1. For equity to asset ratio 0.75 is to 1. For liability to asset ratio it is 0.25 is to 1, and capital gearing ratio it is 2 is to 1. Dear student, this standard value is very much important for your MCQ, so try to memorize this. Dear student, with the help of this 9 ratio we can check the capital structure of the organization. Dear student, now test the profitability. That means what is the profit concern the organization is. That means how much profit they earn, or is this organization is profitable or not. Dear student, for this we can check gross profit ratio, we can check net profit ratio, we can check return on capital employed ratio, we can check return before interest and tax on capital employed, we can check return on equity shareholder ratio, and we can check operating profit ratio. These are the some important tools for checking ratio to profitability. And standard value of gross profit is 20 to 30% for an organization. Net profit ratio is 10% to 15%. Return on capital employed ratio is 10% to 15%, and return before interest and tax is 15 to 20%. These are the standard value for checking the profitability ratio. And the last one is ratio to test business activities or operating efficiency. That means with the help of this ratio we can check the efficiency of management. The management can run the business smoothly or not. That means our MD or our director or our other staff are working properly or not. That we can check by the help of this ratio. These are stock or inventory turnover ratio, account receivable turnover ratio, accounts payable turnover ratio, capital employed turnover ratio, working capital turnover ratio, fixed asset turnover ratio, current asset turnover ratio, bad debt to account receivable ratio. And the standard value for stock turnover ratio is 8 times, account receivable turnover 4 to 6 times, accounts payable turnover is 6 to 8 times, capital employed turnover 3 to 5 times, and bad debt to account receivable 5% to 10%. These are the some important ratio for checking or testing the activities or operating efficiency of an organization. Dear student, now the formula. Earlier I have shown you different types of formula used for testing different condition of an organization. Now here all the formula is given: current ratio, current asset by current liability, quick ratio, liquid asset by current liability, working capital ratio, cash to current capital ratio. All the ratio, dear student, I have given here. You will write it in your copies as a classwork. You will try to memorize it so that you can easily solve the problems from ratio. Inshallah, from next class we will do math. That time you need to help the formula, because without formula you cannot solve the problem. So this chapter is formula based. This 22 formula, if you can learn, easily you can get 10 marks in the exam. And you know that in the board exam one math will come from this chapter. If you can memorize this 2 pages of ratio formula, you can easily get the number. Dear student, I hope you will follow this. Thank you very much. May Allah bless all of you. Allah Hafiz.